Hi and welcome to Swissquote's Daily Market Talk. It's Thursday, October 30th. A Fed, a Bank of Canada, and a Bank of Japan decision, a successful meeting between Trump and Xi Jinping, and three big technology earnings just landed on the headlines since the last time we talked, so in the last 24 hours, and somehow help investors make some important decisions about their positioning. So we will talk about all that and more. But before we do, please keep in mind that opinions are my own and this is not financial advice. So let's start with the Fed. The Fed, as widely expected since weeks, lowered its interest rates by 25 basis points yesterday and announced that it will end quantitative tightening from December 1st by reinvesting maturing treasuries fully rather than letting them roll off. But Powell dampened the mood after the meeting by saying that a further reduction of the policy rate in the US at the December meeting is not a foregone conclusion. Whereas it was priced in with more than 90% probability, remember, into this week's monetary policy meeting. So that hurt. As a result, the US 2-year yield that best captures the Fed rate expectations jumped 13 basis points yesterday after the decision to above 3.60% level, while the probability of a December rate cut from the Fed tanked to 70% from above 90%, as I said earlier. The US dollar rallied across the board, and among majors, sterling was one of the most heavily hit currencies. Cable slipped below its 200-day moving average yesterday, and the pair will certainly remain under pressure until the autumn budget in the UK. Then the dollar CAD dived to 50-day moving average after the Bank of Canada also announced a 25 basis point cut on its end yesterday, but recovered on announcement that it's probably done cutting the interest rates this cycle. The euro dollar briefly returned below the 116 round mark yesterday, though the move didn't damage any important technical levels other than the 116 round mark, and the European Central Bank is expected to maintain its own rates unchanged at today's policy announcement, while the dollar yen extended gains to the doorstep of the 153 level in Tokyo this morning, as the Bank of Japan kept its own monetary policy rate unchanged at this week's meeting. The Bank of Japan remains committed, however, to further policy normalization, so further interest rate hikes, but they also expect inflation in Japan to ease from 2.7% to 1.8% next year, somehow hinting that they are not really in a hurry to do so. So that's it for the FX moves. In summary, the US dollar is stronger today on a hawkish readjustment in Fed expectations. The rest of G7 complex could feel under pressure in the coming weeks, especially sterling on budget concerns, and the yields are also expected to rise to readjust to the new reality of an uncertain Fed cut in the December meeting. Of course, prospects of fewer or slower rate cuts from the Fed in the coming months didn't enchant investors yesterday. Equity markets sold off on the news. The S&P 500 Nasdaq fell sharply after hitting fresh all-time high levels at the open. Happily, Nvidia was there to save the day, right? The company became the first company to hit the $5 trillion valuation in the world's financial history after its CEO, Jensen Huang, announced the day before at the GTC conference a series of fresh deals in and outside the United States and even beyond the chip industry. And in this context, the Nokia deal stood out, as you know, showing that Nvidia is now stepping into communication networks. Why? To make sure that the huge amount of data, the huge data flows that will be generated by AI applications will not remain stuck on unadopted networks, unadopted pipelines. So he wants networks to be adopted to the amount of data that will be generated by AI to sense the data traffic and manage traffic accordingly to avoid congestion and reduce processing times. I mean, this company, Nvidia, with Jensen Huang, remains a step ahead of the game. There is no denying that. And Jensen Huang is obviously fighting for its dominance despite other companies like Qualcomm, for example, also joining joining the AI chip race. Now, there's a small bump on the road this morning though, and that's that Trump and Xi meeting might have gone super well and amazingly, but the two leaders apparently did not discuss about the Blackwell chip exports towards China, which actually came as a disappointment to some who were expecting that there will be something good on the wire on that end. But you know what? Well, Jensen Huang wants investors to assume that their Chinese revenue will be zero. So anything on top of that, anything on top of zero would be the cherry on top. So my bottom line is, Nvidia gives chills to those investors who own it and attracts a lot of criticism from those investors who do not. But the truth is, the earnings clearly keep up. Now, another place where the results are keeping up with the price action and investor expectations is the Korean SK Hynix that actually announced a 62% jump to its profit last quarter, and also said that it actually sold all of its memory chip lineup for the next year. Boom, the share price also reached another high after yesterday's 7% jump following the results, and today it's up by 2% again, probably also backed by a trade pact announced by the US and South Korea in between. But you know who struggles to keep up? Apparently Microsoft. Microsoft, despite its massive spending and building AI infrastructure, said yesterday during its results that its Azure cloud unit hit capacity constraints last quarter. But besides that, their revenue and earnings beat expectations. Azure grew more than expected as well at nearly 40%, but the idea that the company must spend more to meet insatiable cloud demand discouraged investors apparently and sent the stock price 4% lower in the after-hours trading. We actually saw a similar reaction to similar results from Meta yesterday after the bell. The company announced better than expected revenue and earnings for last quarter, but they said that they must spend more aggressively on AI next year to make sure that they are not under investing. So the share price of Meta also tanked more than 7% in the after hours trading, while Google actually pulled it off quite well this time around. The company's revenue surpassed the $100 billion psychological mark. The earnings per share was way better than expected by analysts. The company also pledged to keep spending on AI as the others, but the 34% growth in its cloud revenue actually pleased investors more than Azure's 39% growth versus 37% expected at Azure. Oh well, go figure. Google shares were up in the after hours trading. Anyway, today Apple and Amazon are the next to reveal how they performed last quarter, with Amazon's AWS being the focal point for investors obviously. And other than that, the European Central Bank will announce its latest policy verdict and will probably repeat that the policy is in the right place right now and there's no need to change it. And oh, I almost forgot. Well, today's meeting between Trump and Xi was, according to Trump, amazing and outstanding. A piece of news that certainly counterweighs a bit of yesterday's Fed disappointment among the Dows, but probably not enough to hint at a positive start across the US major indices this morning, because the US futures are slightly in the negative at the time I'm talking here. Anyway, there could be a lot of turns and twists, so let's see how the day unfolds. But this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, good day trading.
This content is intended for individuals who are familiar with financial markets and instruments and is for information purposes only. The presented idea, including market commentary, market data, and observations, is not a work product of any research department of Swissquote or its affiliates. This material is intended to highlight market action and does not constitute investment, legal, or tax advice. If you are a retail investor or lack experience in trading complex financial products, it is advisable to seek professional advice from a licensed advisor before making any financial decisions. This content is not intended to manipulate the market or encourage any specific financial behavior. Swissquote makes no representation or warranty as to the quality, completeness, accuracy, comprehensiveness, or non-infringement of such content. The views expressed are those of the consultant and are provided for educational purposes only. Any information provided relating to a product or market should not be construed as recommending an investment strategy or transaction. Past performance is not a guarantee of future results. Swissquote and its employees and representative shall in no event be held liable for any damages or losses arising directly or indirectly from decisions made on the basis of this content. The use of any third-party brands or trademarks is for information only and does not imply endorsement by Swissquote, or that the trademark owner has authorized Swissquote to promote its products or services. Swissquote is the marketing brand for the activities of Swissquote Bank Limited, regulated by FINMA, Swissquote Capital Markets Limited, regulated by SISEC, Swissquote Bank Europe SA, regulated by the CSSF, Swissquote Limited, regulated by the FCA, Swissquote Financial Services Limited, regulated by the Malta Financial Services Authority, Swissquote MEA Limited, regulated by the Dubai Financial Services Authority, Swissquote PTE Limited, regulated by the Monetary Authority of Singapore, Swissquote Asia Limited, licensed by the Hong Kong Securities and Futures Commission, and Swissquote South Africa Limited, supervised by the FSCA. Products and services of Swissquote are only intended for those permitted to receive them under local law. All investments carry a degree of risk. The risk of loss in trading or holding financial instruments can be substantial. The value of financial instruments, including but not limited to stocks, bonds, cryptocurrencies, and other assets, can fluctuate both upwards and downwards. There is a significant risk of financial loss when buying, selling, holding, staking, or investing in these instruments. Swissquote makes no recommendations regarding any specific investment, transaction, or the use of any particular investment strategy. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. The vast majority of retail client accounts suffer capital losses when trading in CFDs. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. Digital assets are unregulated in most countries and consumer protection rules may not apply. As highly volatile speculative investments, digital assets are not suitable for investors without a high risk tolerance. Make sure you understand each digital asset before you trade. Cryptocurrencies are not considered legal tender in some jurisdictions and are subject to regulatory uncertainties. The use of internet-based systems can involve high risks, including but not limited to fraud, cyber attacks, network and communication failures, as well as identity theft and phishing attacks related to crypto assets.